680's Kris McCusker joins us now. Kris, sinking oil prices and layoffs at Bombardier were having a significant impact on the markets today.
That's right, Francis. Oil was lower for a 9th straight day. For those of you keeping track, it's very close to an 8-month low, and it actually entered bear market territory today. That's a drop of 20% from the peak, which, by the way, was about a month ago. So energy stocks weighed on Bay Street as well. Shares in Bombardier saw the biggest one-day drop in about 3 years. The stock was down 24% to $2.14 a share. Company planning to get rid of 5,000 jobs and sell off 2 units. All of this as it turns the focus to rail and business jets in order to reduce the net long-term debt of about $9 billion. So the TSX slightly lower today, still up by about 1% this week. A mixed finish in the U.S., though no big moves. Wall Street also looking at gains this week. And then no change in interest rates in the U.S. We got that announcement today. That was expected. Sounds like there will be a hike in December. So will the Bank of Canada feel the need to keep pace? I asked an economist what she thought.
The Canadian and U.S. economies are diverging when it comes to how much debt they hold. Canada holds substantially more consumer debt than the United States, which means it's going to be a lot more difficult for Canada to absorb those interest rate hikes relative to the United States peers. From my point of view, that means that the Bank of Canada will feel vindicated by higher interest rates in the United States. They'll continue to feel more confident about the U.S. story as long as the Federal Reserve is feeling confident about it. But it's not necessarily true that they're going to be able to match it one by one.
And we are hearing that the Bank of Canada very likely to raise rates in January, but of course subject to change as always.
As always. Yeah. Speaking of volatility, it continues for marijuana stocks.
Yeah, kind of a crazy ride. I don't know how people hold these stocks. It can be a little nerve-wracking. Most of the big ones today lower on Bay Street today. Canopy Growth down 7.6%. Aurora Cannabis off by about 6%. Now yesterday a big spike for this sector on both sides of the border. A couple things going on. Michigan opted to make marijuana legal in the U.S. as part of that midterm election vote. A couple states voted to allow legal pot for medicinal use. And then the U.S. Attorney General Jeff Sessions, who was seen as anti-pot, he was fired or resigned, depending on which story you believe. All that optimism seems to be gone, at least for today. Now, keep in mind, though, the pot stocks on Bay Street have seen big gains in the last year. Canopy Growth, the best performer, up by 184%.
Wow.
Yeah.
So it is still difficult days for a lot of brick and mortar retailers, but there is one ongoing Canadian success story.
Yeah, it's Canadian Tire. It's raising its dividend after the retailer reported its third quarter profit and sales grew compared to a year ago. Revenue was up as well from last year. Now, the company, which also owns Mark's Work Warehouse, Sport Check, and newly acquired outdoor clothing company Helly Hansen, which, by the way, also pitched in for this earnings report for the first time. Right across the banner, Sam's store sales up by 2.5%. This is something that investors pay very close attention to. So the stock today up by almost 11%, higher by as much as 12% at one point, and that was the biggest intraday jump since May of 2013.
You know, it's one of the only flyers I still look forward to getting, but maybe that's just me. I don't know.
No, I get it. I totally get it. Yeah.
So we've all received them, text messages or emails claiming to be from your bank, but it turns out that CIBC is one of the bank names being used most often in these so-called phishing scams.
That's right, and I think we've got a picture here of what this looks like. Sometimes they come by text message, sometimes by email. So this is an example of the text message. Of course, it's a dead giveaway if you get a text like that and you don't have a Bank of Montreal account. But if you do, this is something you should be on the lookout for. And we are hearing that CIBC is one of the most commonly targeted brands used by cyber thieves. An email security firm says that bank saw a more than 600% surge in fake email attempts in just the third quarter. This is coming from Bade Secure. Now, CIBC was the lone Canadian company on the list of top 25 brands targeted. It's unclear why there was a surge at CIBC. One factor, though, could be the launch of its Simply Financial direct banking brand last year. The firm does outline that when users are less familiar with things, that sometimes it's easier to deceive, I guess, for lack of a better term. Now, BMO on the list as well, followed by Scotiabank, and we do have a statement from Scotiabank. We can put that up on the screen, and part of it you can see there. We will never ask customers to validate or restore their account access through unsolicited email or text message. So I would think that this is, generally echoed with all banks. This is not a normal way for the bank to contact you.
But it's tricky. I mean, when you see these messages, it's tempting to click on it, but most important, don't call the bank if you have a question.
Yeah, exactly. And I get it, right? Like, oh, my bank's been... No. Wait, take a breath. No.
And we're not inheriting $5 million either.
No,
Yes.
I know. I keep getting disappointed by those.
I know. Maybe one day, Kris. Thanks so much.
Maybe one day.
Okay.
Take care, Francis.
Here's Christina Howren.